Good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated June 7, 2023. Before we go ahead, I would like to give a small disclaimer that registration granted by SEBI, membership of BASIL, and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment security markets are subject to market risk and read all the related documents carefully before investing. So without taking up much time, I'll start with Nifty 50's chart analysis for the past day and the past few days as well. So yesterday, Nifty had a flattish opening. After that, it came down lower, traded up near the lows, and with surge in the buying in the last 1 hour of the trading session, Nifty was able to close on the flattish tone. But as you can see on the past few days, uh, this was like last Friday's session. And apart from that, Nifty has been probably been in a muted range. Nifty is facing resistance near the 18,600 to 18,650 levels. And similarly, it's not able to cross 18,600 in the last three sessions as well. It is probably closing marginally below that. And probably once it closes above that, uh, at least for the next couple of 100 points, you can see Nifty probably go ahead till it reaches the previous highs of 18,887. That is the previous all-time high for Nifty. Around those levels is where Nifty can find resistance again. And uh, if we talk about from the support levels, the green line, this green line, this is the 21 DMA, and Nifty holding the 21 DMA is pretty important. It's still trading around 2 to 3% above, so which is not that bad for Nifty. And the immediate support for Nifty is the green line, that is the 21 DMA. And if it gets breached, then your 200 DMA, your 100 DMA, 50 DMA is pretty much clustered. But at this moment, 21 DMA looks like a good support for Nifty. From an O'Neill front, if we talk about it, Nifty continues to remain in rally attempt. We haven't seen a follow-through day up till now. Follow-through day is an up move of 1.5% higher, 1.5% or higher on volumes higher than the previous day. So we haven't seen a follow-through day or an FTD yet, or Nifty even hasn't reclaimed its recent high. So if even if a follow-through day is not achieved, if Nifty regains its previous highs, we'll take the market to a confirmed uptrend. But follow-through day is always good for the market because no rally has ever started in any market across the globe, according to O'Neill search, uh, without a follow-through day. Talking about key news, yesterday FI bought Indian equities worth rupees 386 crores and DI sold equities worth rupees 489 crores. India earned rupees 11,000 crores as dividend from your public sector banks in FY23, which is up 27% YOY. Leading the pack was India's biggest lender, that is State Bank of India, with rupees 5,500 crores out of the 11,000 crores total. General Electric and Hindustan Aeronautics Limited signed a deal on jet engines, 600 Indian MSMEs to benefit, and both companies will be entering into an agreement to co-produce jet engines in India. GMR Infra Group divested 818,000 square feet warehouse facility at Hyderabad Airport to ILP Core Ventures, IPT, for 188 crores. Torrent Power signed an MOU with Maharashtra Government for three pumped storage hydro project of 5,700 megawatt capacity. Company to invest 27,000 crores in the project. Talking about the global market update, your US markets was flattish to on a higher note, as you can see. Dow Jones was kind of flatted up 0.03%, and S&P 500 closed higher by 0.24%. Nasdaq closed higher by 0.36%. Asian markets, apart from Nikkei, the other two indices, your Chinese and the Korean indices, is trading higher. around 0.31 and 0.35% respectively. Nikkei is trading lower by 1.43%. SGX Nifty is indicating higher opening, and previous close for Nifty was around 18,599 levels, marginally below 18,600, and SGX Nifty was trading around 18,700 levels, which is 100 points higher than previous close of Nifty. Talking about the chart of the day, the chart of the day for us is Bank of Baroda. As you can see, the stock is forming a stage 2 consolidation base, and the stock is still 6% to the pivot, and even the off highs is 5.96%. Talking about from canceling perspective, EPS strength is fair, price strength at 78, and buyer demand is good at B+. Overall, the number of fund holding for the stock is improving at good levels. Even the past quarter, your fund holding increased by nearly 43% on a very high base of market capitalization of 95,900 crores. The previous three results for all your public sector banks have been very good, and similarly for your Bank of Baroda has also been very excellent. As you can see, September, December, and March quarter, and that is why probably the EPS strength for the stock have been improving. And from the last stage 1 cup with handle base also, there was a good rally where the stock nearly doubled from the first to second base, as you can see. So good prior uptrend, and even during this base, even now, as you can see, when the stock is declining, it's probably declining on very low volume, so no signs of distribution, which is a really good sign. And it's currently just holding above the 21 DMA. So you have we have time, so it's still 6% to pivot. So you can keep the stock in the watch list. From here, if the stock rests near the 21 DMA and starts to move higher on above average volume, which will be a really good sign, which will lead to your RS rating also to trend higher. And if the stock breaks out on above average volume and stays in the buy zone and the markets remains supportive as well, it can be a good stock to keep in your watch list and in your buy zone. So thank you, and that's it from our side. And stay tuned to this space of pre-bell with William O'Neill India from Monday to Friday at 8:45 a.m. sharp. Thank you.